Welcome to Markets Now. I'm Michelle Rook along with Kevin Duling with KD Investors. And we started off with some higher grain trade this morning. We've backed off a bit here, at least in the wheat sector, with the cattle market seeing a little bit of pressure initially, hogs higher. And Kevin, let's talk about the wheat market first. Obviously, we had a big overnight session trading the Russians saying that they're going to end the Black Sea grain deal, or at least they want some different terms if they're going to extend again.
Yeah, that's correct. Their formal statement today was we're going to we're going to step out of the grain corridor, the grain deal, until things get met to our liking, and then they can step back in after that. One of the things last night that happened that pretty much assured that the grain deal was going to close was the main bridge peninsula to Crimea got hit in an attack, and it's going to be shut down for an extended time, and that prompted Putin to have an emergency session to discuss it, and there's pretty much no way the grain deal is going to go forward after that. So now the question is, how big of a market impact is this going to have? How long of an impact? It just seems like anytime we get information out of there, an hour later, it's already old information. So things move quick. But no, I think, when you had Turkey was saying, rumoring they might bring their Navy in to escort ships in and out. But at the same time, you also had an attack on the Viterra Odessa terminal. So to me, it looks like things are ramping up. It looks like things are going to be very difficult to get ships in and out of there for the next little bit. So I would expect some market impact here. So,
yeah. But Russia, it looks like, is going to continue to be able to export. Is that right?
Yes, Russia will continue to export. Their prices have been increasing, which is odd. It's the middle of their harvest and their price is increasing. So that gives you an idea of how strong demand is. It also gives you an idea what their new crop looks like. So yeah, they will continue with the grain flow. This whole wheat complex is really fascinating because you've got a significantly lower production this year than last year, and in just about all the key players. And the importers last year took the stance of reducing their holdings, reducing their stocks, just trying to get by and not pay the high prices. And now that prices have dipped, there's going to be less wheat to buy this next year. And and plus you've got some pretty strong droughts, in the northern African areas, and there's going to be a very strong import pull. And I think things are going to escalate pretty quickly. So it's going to be an interesting year for wheat.
Yeah, no doubt. And here in the United States, Northern Plains continues to be fairly warm and dry. And so we do expect maybe a little bit of a decrease in production going forward there as well, Kevin.
Absolutely. Yeah. The Northern Plains growers I talked to, they're hit and miss. Most of them are a miss. You got little short wheat headed out too early. It's not going to do that well. If you get into Canada, it's even worse. USDA was pegging them at 37 and they dropped them to 35. I've been at 31 million metric tons. I think we'll be lucky to go just to get them over 30. That's going to really tighten up that balance sheet a lot. So Pacific Northwest has started harvest a week ago and everything's coming in. In some cases, I think overall the crop's going to be 25 to 30% below average. Some people were expecting average, but that's not going to happen. And it's poor quality as well, which is unfortunate. And then, the Argentinian crop looks, 15 to 18, where normally it's 20. The list goes on. So this is going to be quite the year. And I guess the most amazing part of this wheat balance sheet is this will be the fourth year in a row we have flat demand. And we're going to have flat demand just because the product isn't available to have increased demand. And so the last time we had 3 years of flat demand, the next year increased 40 million metric tons. And this would be that fourth year. So we're going to delay that demand until that's available. which would mean we would have to produce an 840 million metric ton crop next year for the 24 crop. And right now we aren't priced to even match 23. So I expect some very dynamic moves in this market coming forward.
Yeah. So far, we have not seen the demand really translate to exports for the United States. But with the dollar pulling back now and going under par, do you think that that's going to give us a little bit of a boost there?
It feels like there's been a psychological shift there, yes. So the last couple of weeks, we finally started to see sales. At least white wheat and spring wheat both saw decent sales out of those. You're not going to see big, hard red sales this year. You're just that's going to be a dog for the whole year, just lack of supply. But the hard red spring should get gobbled up pretty quick, and white wheat should gain some momentum here. It should be pretty good sales for that. But overall, it's still not going to look impressive just because we don't have the supply available to really boom out the U.S. exports. But so you have to temper your expectations on the weekly number, but look at what's actually moving.
Yeah. So I mentioned off the top of the show here that, we had a big overnight session, but we've kind of lost a little ground in the wheat market, at least here, as we've gone through the early portion of the session. Why?
There's a lot of theories we could throw out there. We were plus 18 at the break, I think, in the September Chicago wheat, and the other wheats close behind, and then right at the opening bell, 8:30 Central, we were down 10, 12 off of that, and then now, I think we actually went to negative territory for a bit. It's hard to say. I avoid making any thoughts or theories on the market in that first hour and a half after the open. It seems so thin. Things yank back and forth before the real trend sets in. So we'll see what happens after after 10 a.m. Central. We may finally get into a trend. But and it's also, you got to understand it's a wartime environment, and you've got countries playing these markets. You've got the Fed playing these markets, and they're active, and wheat's such a thin market, they can make it do whatever it wants, and it makes it very difficult. So I don't know who the players were this morning, but it just, we just got to remember that there's a lot going on politically, and wheat's the second most political market out there behind crude oil. And if Putin's wanting a higher wheat price, you probably have actors trying to bring the price down. So
obviously. All right. Let's talk about corn and soybeans, though. Corn has pulled off its highs, too, along with the wheat market. Soybeans still up there. But that market really, I guess, had a pretty bullish move last week with higher weekly closes, despite the fact that we had some bearish news in the WASDE report. Markets are concerned about yield, about weather. Is that what's driving that?
Partly, and then you've got the big demand rumors. I mean, you got some pretty lofty demand purchases out there that haven't been confirmed yet, and so it's everybody's trying to figure out what China's been up to, and how many cargoes they've bought from us and not, and then on top of that, I think there's the weather maps continue to show some pretty hot and dry stuff coming back in, as we get towards the last week of July and out. So I think there's some of that in there as well. So, and it's just the notion, after that last USDA report, that that was a best case production scenario, and if we come off of that at all, or if exports improve over what their predicted number is at all, I mean, there's really not much room for error. So it's going to be sensitive a little bit. It doesn't have really the justification to fall off too far yet.
Yeah.
So
it was encouraging, though, to have, like I say, a higher weekly close in all the grains after what was a pretty bearish report, especially for beans. Cattle market this morning, what's your thoughts there? We made new contract highs in live cattle futures on Friday, pushed by that higher cash. Feeders were up, but did not make new highs again. So where do you see that market going? How important are last week's highs?
Well, I'm watching the feeders close, and I'm just using the theory, very simple, that cattle, when they make a high, they make kind of a big, long, rounded top. They don't make a spike and just move straight down. So I'm just watching that feeder action because it's a candidate for a high, right? We made the high last Wednesday. We sold off from it. We bounced back a little bit, and I would really like to see that market make a new high this week. At least get up there and challenge Wednesday's high. If it can do that, then I think we got a shot at another leg up before we get, before it's time to do more hedges and whatnot. But if we can't do it, if we fail again here in the next 10 days or so, then I don't know. It's going to look like a pretty strong candidate for a high. So we're just going to have to watch a little bit.
Okay, thanks for that analysis as always. Kevin Duling with KD Investors, that is Markets Now.